I believe we're about to experience one of the largest transfers of wealth in the history of the entire planet. And so if you want to benefit from the research I've done and I'm about to share with you, then you absolutely must stick around till the end. If you're not a subscriber, now's the time to subscribe so you can get future updates on videos and information that I put out there. And please, please do me a favor. Hit the like button now. I would greatly appreciate it. It shows me that you made it this far in this video, and we have a lot more good things coming. So if you love crypto and you're passionate about crypto and you want to make life-changing gains, you might want to stick around to the end of this video. As always, this is certainly not financial advice. I am not your financial advisor. Make sure to do your own research. This is for entertainment purposes only. I'm sharing with you my journey, and if you get something from it, I'd greatly appreciate you leaving a comment down below. So let's get into it. So we're talking about the real-world asset tokenization. So what is RWA? What are some real-world examples of RWA? What are benefits of tokenization? What are recent developments? Who's leading the blockchain with RWA? What are the impact on crypto prices? What are some key metrics and players in this space? And how to profit from RWAs? Then we're going to wrap up, conclude, and give you some takeaways, and I'll get you out of here. So let's take a look first. What is RWA? So RWA just refers to the tokenization of real-world physical assets like real estate, commodities, stocks, bonds. It could be art or other collectibles and things like that. So how does it work? They tokenization converts RWAs, those real world assets, into digital tokens that can be bought, sold, used in decentralized finance. So benefits, we're going to go over in extreme detail the benefits, but enhances liquidity, provides global 24/7 trading access, reduces costs and improves security, and fights against fraud and gives you more transparency and things like that. So let's take a look at examples. So real estate, very simply put, you can tokenize real estate and have fractional shares. Let's say you give a certain commercial real estate property a million tokens worth. Well, you can buy 5 tokens or 100,000 tokens. You don't have to buy all million tokens, and it can be sold. Your stake can be very liquid. Stocks and bonds. You can tokenize stocks and bonds and give you as a security tokens, enabling blockchain-based trading. Blockchain-based trading, very, very cool. Gold and commodities, precious metal like gold and other commodities can be tokenized to enable digital ownership, ease of transfer, ownership, more liquidity, all these things. Art and collectibles. Think about NFTs. Well, NFTs just represent something. It's a digital stamp of something, and it can be artwork or other things and make it more liquid and more tradable, like we've said. So what's the potential value of all this stuff? If we tokenize real estate alone, like all real estate, you're talking about, $375 trillion probably of potential tokenization. But what's realistic? What I've seen is unlocking maybe $16 to $50 trillion of tokenized assets by 2030. That's not that far away. That's like 5 years away. Institutional adoption, you look at major financial institutions like JP Morgan, Citi, and they're already doing this stuff. BlackRock is, tokenizing certain money markets and things like that. So what about growth in DeFi and TradFi or traditional finance? That's where a lot of this stuff will be traded. So you talk about potential explosion of the values of these DeFi sites and DeFi volumes. It could be absolutely insane. Regulatory acceleration. We're looking at the regulatory authorities accelerate. We look at a couple of weeks ago, we had the Senate Banking Committee have a full press conference based around digital assets. And they see this as a major opportunity to make the United States the number one leader in all of these different frameworks and tokenization and things like that. So what are the real benefits? What are the real benefits of tokenization of real world assets? I think about the first one. The first one is increases liquidity. If I have an investment property, let's just say a residential investment property, and I want to sell it, I have to find one buyer that has enough and can buy it quickly. Well, if I tokenize it, I can sell off shares Maybe I only want to sell a 10% stake. Maybe I want to sell a 20% stake. There are some more complexities in that with as far as who's going to what's it going to be to maintain and cost efficiently, effectively pay the cost to ongoing basis. But these things can be worked out through smart contracts. 24/7 global access. I mean, you've opened up your marketplace to the entire planet very quickly. If someone wants to invest 50 or $100, they can do so. And now smaller investors can get involved in big profitable projects, potentially. Faster transactions. We all know that the blockchain is way faster than anything traditional finance has to offer. It's not only faster, it's cheaper. So tokenizing reduces reliance on intermediaries, significantly cutting costs, in administrative expenses, paperwork, transaction fees. There's all kinds of costs in traditional finance, and everyone's got their hand in the pot, and everyone makes a little something out of there. Enhanced transparency and security. This is huge because right now, if I buy a commercial real estate property, I have to do a title search to make sure the chain of title is very clear, and I'm not going to lose my asset later because someone else has a actual real claim to this property. And if on the blockchain, you can see the chain of transfer very, very, very easily. So it's going to be very apparent who that property belonged to last and before that and before that. And these blockchains ensures immutable records. And immutable means it can't be deleted, can't be erased. And as you know, the blockchain is there forever. So these are some of the 5 most important realizations about real world asset tokenization, and they're positives, right? Recent developments. I mean, we've heard BlackRock talk about, or maybe you haven't. Larry Fink talks about how all stocks, the whole stock market, can be given smart contracts and be put on the blockchain and tokenized. JP Morgan Onyx project. I remember a couple of years back, Jamie Dimon from JP Morgan, their CEO, said, Bitcoin was nonsense. I don't know exact words, but in the background, they've been developing blockchain for asset tokenization to also have enable instant settlements for institutional clients. So they realize that this is a cost-cutting measure, not just for their clients, but for them. European Central Bank trials. The ECB is exploring digital securities and tokenized assets to modernize financial infrastructure. They're looking at it. U.S. regulatory. We know the SEC, we know the Senate Banking Committee are looking into it and providing regulatory clarity and a framework to make all these things happen. Asia also. I mean, Singapore and Hong Kong are developing frameworks to facilitate large-scale real-world tokenization. So you really can't get away from tokenization. It is coming. Now, I look at who's doing it. Now, who are the blockchains involved? Or what are the blockchains involved? What are the tokens involved? First one that comes to mind is XRP. I know the XRP army loves this, but they see XRP is fast. It's low cost. It has built-in decentralized exchange for seamless RWA trading. Mantra, or OM, bridges traditional finance and DeFi, focusing on compliant RWA tokenization and lending. Chainlink, talk about real-world data integration for tokenized assets. ONDO Finance, and some of these work together. ONDO and XRP have some partnerships. ONDO specializes in tokenizing U.S. treasuries and structured finance products, bridging institutions with DeFi. So ONDO is another one that's actually partnered with XRP. Algorand, another high-speed, low-cost token made for large-scale RWA tokenization or transactions and smart chain contracts. And Ethereum, of course, it's hard to talk about anything without talking about Ethereum. Even though it hasn't really performed well as far as cost, it is a large smart contract platform with institutional adoption and mature ecosystem for RWA tokenization. Now, we know Ethereum itself is expensive and slow, but the layer 2s on top of it are modernizing it. And I know future works for Ethereum are to make it faster and cheaper. So how does this impact? How does RWA? I mean, yeah, we understand they're going to tokenize things, but can you profit from that? What's going to happen? Why am I even talking about this? And are you even listening? If you are, if you made it this far, please, for the love of God, hit me a like button down below. And if you're not a subscriber, subscribe, share, do all those things. So look, if you tokenize something with XRP, you're going to have more demand for the native tokens. The platforms you're going to use their native tokens for transactions, governance, and collateral, increasing token demand. So there's just going to be more token demand. More demand and a constant supply or a falling supply means what? Price goes up. Institutional adoption, right? More major financial institutions tokenizing RWAs, they're going to drive the network activity and demand for blockchain-based assets higher. So, these things should increase in value to cover the increasing demand. Increased liquidity. Tokenized RWAs introduce trillions of dollars. Remember, there's 3.2 trillion in the market right now, but increasing market participation and value stability. So if you increase liquidity, you put more people buy things with tokens, more people are going to get, introduced to crypto. This is going to drive these cryptos up, but also other cryptos, right? They're already on there. They might as well buy something else while they're there. This is not financial advice, by the way. Supply shock and scarcity. Locking up tokens in RWA smart contracts reduces the circulating supply, leading to potential price appreciation. Easy for you to say, price appreciation. So this price appreciation is obviously what we're looking for. When the value of the cryptos you hold goes up, you make money, right? Regulatory clarity. This is needed. Absolutely needed. That regulatory approval increases institutional confidence, right? And bringing large-scale investment into blockchain networks. The more the government gets involved, yes, I understand this is what crypto is trying to get away from, but to do something on the large scale, governments have to have some regulatory influence, because if they don't and people lose their money, people will stop doing it. It will go away. So people have to, and that's been the real plague of crypto, is all the scams surrounding crypto in the world. But if you can start to eliminate those scams, it gives you more confidence. Just think about Sam Bankman-Fried and FTX. Well, FTX was not an American crypto. It was offshore, and it didn't have the regulatory oversight that it really needed to do what they were saying they were doing. And had that been in the US, it probably wouldn't have happened. So just a point on that. Okay, so here is just an overview. Let me move my mug out of here. Well, just stick me over here. Here's those platforms I just mentioned. XRP, it's gone up 384% in the last year. Remember, fast, low-cost transactions, built-in decentralized exchange, cross-chain interoperability. So XRP, the highest of the market caps of all the ones we talked about, other than Ethereum. Sorry, Ethereum is number 2. But Ethereum, Ethereum has gone down 0.9% in the last year. ONDO up almost 400% in the last year, about a $1.81 billion market cap. Mantra, $7 billion market cap, up almost 3,000%. Really missed the boat. For those of you who said there's no bull market, look at this, 3,000%. That's as bullish as you can get. No, that's not entirely true. There's more bullish, but that's pretty darn bullish. Algorand, up 44%, $2.3 billion market cap. XDC, up 129%, $1.4 billion market cap. Chainlink, $12 billion. And it's gone down 3.7%. So yes, while XRP and Ethereum are big, this is nowhere near the trillions of dollars of potential in this market. Now, I'm not telling you to buy any of these. This is not financial advice. I'm just sharing with you the details surrounding the cryptos that are leading the charge. And I'm probably left out other cryptos, but these are the ones that, come up over and over again. And there's others, and yes, there's probably lower cap ones I didn't mention. So if you know of any of those, just put them down below. I'd love to hear about them. So still, even though that Mantra is up 3,000% and XRP is up 384%, Ondo's up 399%. Ondo's only at $1.8 billion market cap. Is it potential for that to go higher, that market cap? Yeah, there's a lot of potential for that to go higher. What about XRP? It's a $155 billion market cap. Can that market cap go higher? Yes. When you get outside of the paradigm that these things are just coins that are bought and sold as a trade, like a baseball card, and you understand that there's real world asset tokenization options for these things, that real world assets would be bought with these things and stored through smart contracts, it starts to make a lot of sense that you have to break out of the traditional market cap paradigm and get into a way of thinking that says, look, there's what is it, like $5 quadrillion worth of assets on this planet that can be tokenized. What's a couple trillion, right? What's 20 trillion, $30 trillion of tokenized assets? I mean, gold's at like 18 trillion. Most of real estate, I think, is like 375 trillion. I could have that number wrong, but it's somewhere around there. There's a lot of potential for tokenization of assets. So let's take a look at the key metrics. I looked at speed, cost, institutional adoption, DeFi integration, regulatory clarity to kind of build this little graph for XRP, ONDO, and Ethereum, because these are the ones that are talked about a lot. And you look, obviously XRP fits a lot of the bill. They're very balanced. You know, ONDO is pushing more towards lower in fees and faster transaction. And you have Ethereum. I mean, think about all of the layer twos with Ethereum. Thinking about all the things that are built on Ethereum network. It's a lot, you know, and it's institutional adoption, all these things. So I don't know which one's going to win the battle, but these are some of the things that I'm doing right now, right? So you can invest in RWA tokens. You can just buy the token. You could just buy the token on an exchange and hold the token. That's potential, and you can watch those tokens grow. Now, if you want to multiply that, you use leverage. I do not suggest using high leverage. I do not suggest, or am I inferring that you should use leverage? I don't use a lot of leverage long term, but you can 2x, 3x this stuff if you believe in it and you want to take the risk. It's your risk, not mine. But you can do those things on platforms like BTCC. I got a link down below. I'm not telling you to use it, but if you do, you know, I have a link down below. Weeks. There's a couple other ones that allow you to use leverage, no KYC, things like that. Stake and earn yield. Okay, participate in staking or yield-bearing products that use tokenized RWAs to generate passive income. We're going to see a lot more of these platforms. I mean, there's a lot of platforms right now. You can go to stake crypto, make a return. You can earn yield by staking that. You can trade tokenized assets. You can buy and sell fractionized. Well, we're not here yet, but in the future, you can trade these actual real world assets, and they have a little more bite behind them than we currently have with them. Provide liquidity in DeFi. You know, liquidity pools are risky, but you can make a return for lending, borrowing, or creating the liquidity pools, and you can do that through like Uniswap or Pancake Swap or some of those that offer returns, and you can actually create liquidity. That's how I got into crypto, was creating liquidity pools or liquidity through LP. And that was very interesting. Early adoption of institutional projects. You know, you can monitor these projects and see, you know, which one's doing better. I'm going to be doing this, and I'm going to be talking about it on this occasionally. But which ones are moving ahead? What are some developments with these projects, and what looks like it's moving forward? I like ONDO. I like XRP. I like Ethereum still. I don't own a ton of Ethereum. I own XRP. I own ONDO. Not a ton of ONDO. I own a lot of XRP. But I think that these they're the ones that are leading the way, and that's why I'm talking about them. So let's wrap it up and get you out of here. So RWAs are transforming finance. The world of finance is going to look totally different, and this transfer of wealth is going to go from, you know, straight assets to owning the asset to owning the token that owns the assets, and it might look very. It's going to give a lot of liquidity. Institution adoption is growing. We're seeing all the major, not all of them, but most of the major financial institutions, now that they've been told, yeah, you can hold crypto, that once the SEC took away SAB 121, that they're all looking at it and saying, we can make money with this, because they've been missing out on one of the best performing assets over the last 20 years, almost 15 years. A regulation will shape the market. Yeah, regulatory authorities are already working on this, and it's going to shape the market. And you have to pay close attention. That's why you subscribe to channels like this, is because we're going to give you information in real time. A multi-chain future. You know, right now it is complicated. If you own something on Ethereum and you buy it and you send it to the wrong place, you could lose your money. If you to send things cross-platform, cross-chain is difficult and expensive, but that's the future, and we can see more of that in the future. So that's all I got. I hope you got some value out of this today. You know, there's a lot of information here, and there's a lot of good information. So if you have anything to add, put it down below. If you have questions, comments, concerns, put them down below. Other than that, I will see you next time.